We couldn't even survive if we're in their situation. Concerned about the weakness of the US dollar really fueled the bubble in stocks and real estate. And then when it burst, everybody's economy is screwed up. Credit card debt is still at a record high. That's when everything collapses. And that's with dollar weakness, not strength. The economy of the United States is just that much more screwed up.
Money supply in the United States is falling and money supply in China is growing. So is that in favor of the United States or China?
Well, money supply is falling temporarily in the United States because it rose so massively, in the last several years, but that won't last. Money supply is going to go up as soon as the Fed goes right back to QE, which it's going to be doing. But credit is growing. I don't know, you're looking at money supply, but inflation is also this expansion of credit. And credit is still available. I mean, people are borrowing like crazy. Now some of these companies, look, a firm came out, one of these big buy now and pay later places. Maybe they're finding out it's buy now and pay never because the stock cratered, because people aren't paying back the money they owe. But people have been able to access credit. I mean, credit card debt is still at a record high. Savings are basically a record low. And so this is also fueling prices because people are able to borrow to buy stuff. So that's kind of replacing some of the decline in money supply, which won't last. The official money supply, they're going to turn those spigots on at the first sign of trouble. That's a key point of disagreement because I don't think the dollar loses its status because of its strength. I think it's the weakness of the dollar that ultimately undoes its status because of its strength. I mean, as long as the dollar is sound, I think it continue. I think what happens with all the debt is the world recognizes that it's unpayable and that the United States is insolvent. We keep reminding the world that we're insolvent every time we go through one of these, charades with the debt ceiling. What does the Secretary of the Treasury, what does the Federal Reserve Chairman, what does the President say is going to happen if we don't raise the debt? They say, well, we're going to default. If we don't raise the debt, we default on U.S. Treasuries. So that's an admission that we're running this gigantic Ponzi scheme and that default is eventually inevitable because nobody is saying, well, if we can't raise the debt ceiling, we're going to cut Social Security. We're going to cut Medicare. We're going to raise taxes because we're going to pay our bills. We're going to pay the interest on the debt. We're going to pay the principal. No, they're saying if we can't borrow more money from the rest of the world, well, then we're not going to pay back any of the money that we've already borrowed. So it's like we're running a Ponzi scheme. And so if the world eventually says we don't want to participate in a Ponzi scheme anymore because we know how Ponzi schemes end, then there's a run on the dollar. There's a run on treasuries because the one ceiling that we can't raise is the lending ceiling. See, the debt ceiling is self-imposed. We can keep raising it because that's how much money we want to borrow. But the ceiling that we can't raise is how much money the world wants to lend. And when America's creditors are no mas, we don't want to loan you any more money because you can't possibly pay us back the money we've already loaned you. We're done throwing good money after bad. That's when everything collapses. And that's with dollar weakness, not strength. Well, I think we're only in a good position because of the perception and the dollar's role as the reserve currency. It's like whenever there's a problem in the world, people buy dollars, even if that problem is in the United States. And I think the best example of the absurdity of this, if you recall, the only time that a rating agency downgraded U.S. Treasury debt. They had Standard & Poor's. They went from AAA or wherever it was to AA or whatever they did. And the stock market didn't like that. But when that happened, there was this so-called flight to quality, and people bought U.S. Treasuries on the downgrade of U.S. Treasuries. So, I mean, how can that be? That doesn't make any sense. So that shows you that we even benefit from our own problems because it causes people to want to loan us even more money so we can make those problems even worse. See, this system should have unraveled a long time ago. The fact that it hasn't means that the economy of the United States is just that much more screwed up than it was, years or decades past. And so you're right, eventually it ends. But the sooner the better from the perspective of the longer it takes, the worse it's going to be.
Peter, what do you say to Brett's point about the U.S. as a net exporter of food, net exporter of natural gas? So aren't those big advantages for us?
Yeah, look, it's a good thing that we're blessed with natural resources. Imagine if we were like Japan or something. I mean, we couldn't even survive if we're in their situation. So, it's a good thing we've got those things. But, I think if you actually think about it and you look at the relationship that America has with China, and you just, look at what we sell them and what they sell us. And if you didn't know anything, if you were just like on another planet and you said, hey, here's these two countries, one of them grows shit and takes stuff out of the ground, raw materials, and sends it to this other country, which sends back all these manufactured finished goods, stuff like that. China would look like the real economic power. We're like, a little colony of China. I mean, we're sending them stuff that grows, and they're making all the stuff that, where you need factories. So they've got all the economic industrial might. All we got is a bunch of farmers, not to belittle them, but that's just harvesting what we've got from God. We don't have the industrial might that we once had, because you look at what America's exports were 50, 60, 70 years ago. We were exporting manufactured goods. That dwarfed our agriculture. That's what we were giving everybody. Automobiles, refrigerators, washer dryers, television sets, cameras, all the stuff, all the quality stuff was all made here. Nobody would buy anything made in Japan, right? It was a joke. So it shows you how much everything has switched when you just look at the terms of trade and what we produce and sell and what we have to import. The mistake that Japan made, well, first of all, the mistake that they made during the 80s was not allowing the yen to appreciate more. They began to get concerned about the weakness of the US dollar, and so they printed too much money, and they kept interest rates too low, and that really fueled the bubble in stocks and real estate. And then when it burst, instead of allowing the free market to purge the economy of all the zombie companies and reallocate resources and do the right thing, they constantly intervened, and the politicians were under pressure to do things, and all they did was harm. And of course, they continued to have this foolish policy of creating inflation. We need more inflation. We need low interest rates. And it was compounded by the fact that the U.S., we brought our interest rates down to zero. And so then they're like, screw, how do we get under zero? We got to go negative. I mean, so they should have just allowed their economy to restructure and allowed the dollar to collapse against the yen. They should have let the yen go up. They should have allowed everything. And now, the Japanese government has a ton of debt. They borrowed all that money to prop up the U.S. economy. We have screwed up everybody. Everybody's economy is screwed up because we are the reserve currency, and we are basically, calling the tune, and everybody is dancing. But when you look beneath the surface, what countries have the productive capacity? That's the key. That's where wealth comes from. Who has the factories? Who has the infrastructure, the supply chains to produce the stuff that people want? It's not the United States. China has that a lot more than we do. Well, war itself isn't inflationary. It's the money they print to pay for the wars. That's inflationary.
There's no supply chain issues during war?
Well, yeah, but then if money supply went down, then, the prices wouldn't go up. You just have shortages.